Good evening, everybody. If you're in the class and you can hear my voice, I'd like you to just type 1 in the comment section. Just type 1. If you can see my face and you can hear my voice, just type 1 in the comment section. All right. Good evening, everybody. I want to welcome you to tonight's class. We have missed about 2 days now that we did not have class, but we need to rush to cover up within the limited number of days that we have left. Okay, I think by the schedule on the initial plan, your class was supposed to end today. Your class was supposed to end today, but we cannot end today. We still have a lot to cover. You know, one or two things came up and I got very busy, but don't worry, we'll cover everything we need to cover. So I need you to stay put and pay attention. So quickly, I'll be diving to my slide so that we can continue from there. Okay, without waiting for every person to be here, they will all join us later on. Okay. All right. I hope you can see my screen now. Now, the other thing about now, we got the time in our trainings that we said there are basically 3 tradable, let me say 2. We started from 4, then it went to 3, then it now came to 2. And what do I mean? We said that there are 4 market patterns. We have the bullish trending market, that is uptrend market, also the called bullish market. Then we have the downtrend market, which is number 2. Then we have the ranging market. Then we have the choppy market. And then we said of these tradable markets, we have only 3 are tradable. Of these market patterns, only 3 are tradable. That means the bullish trend is tradable, the bearish trend is tradable, the ranging market is tradable. And I told you that when you open your computer and you can't tell the direction of the market, it's just choppy. The market is choppy, you know, with very tiny consolidation between tight, you know, resistance and support. You can't really tell. The candles are so small and that's no direction. Just stay away from the market, close your computer and walk away. Just walk away. It's not a tradable market. The direction is not clear. And so when we also said the tradable market, we have uptrend, downtrend, then we also have ranging market. We can also group the uptrend and downtrend as trending markets. Both of them are trending market, whether it's uptrend, they are trending market. Then we also have, we said we have ranging market. So we have trending market, we have ranging market. But inside trending market, uptrend, which is bullish, we have the downtrend, which is bearish. So now, how do you not trade trending market? That was where we got to. And in teaching us how to trade trending market, we talk about the EMA cross, talk about the exponential moving average. So many strategies people use. Moving averages are inexhaustible. In our class, the 10 moving average, EMA 10, EMA 50, and EMA 200. I'm telling you when they cross, how you should enter when the red line, which is EMA 10, cross the blue line from down up, buy. When the red line cross the blue line from up down, sell. When the red and the blue line in EMA 10 and 50 cross the black line, which is up, is a strong buy. When the red and the blue line EMA 10 and 50, cross the black line from up down, that. Then we went to ADX, and I was trying to combine the use of ADX with the EMA, and I said, when the line from down up, it is a buy. Then when the red line cross level 22 with black line from down up, sell. Both of them are from down up, unlike the moving average from up down, from down up. This time around, it is crossing. Either green is crossing with the black, or red is crossing the level 22 with the black, and both of them are from down or from below level 22 up above it. That is the trend of the market. It's a very simple trick, very simple strategy that for most of you who are even students, while you are still learning price action, while you are still learning smart money contract, where you're still learning an advanced way of trading, that is the simple way, simple cheat that just taught you that you can quickly use to make quick bucks from the market and enjoy it. And I told you EMA and ADX, don't forget we are talking about trending market. They are favorable, they are profitable when the market is trending. When the market is trending, it's amazing, it's interesting, it's lovely to use EMA and ADX on that trending market. Now, we later went to talking about trending market, trendline trading, trendline strategy, trendline trading strategy, trendline trading strategy. It's a trendline trading strategy. It's so we started talking about that, and that was where we stopped. And then we talked about the power of trendline trading strategy, the power of it. I told you that it has benefits. It has benefits. It is very simple to use. Let me tell you something. Professional traders use trendline strategy. Trend lines. Professional traders use trend lines. So trend line is not for babies. Trend line is a very simple tool. It provides high probability and high accuracy setup. It is price driven only. It is price driven only. It works on all time frames. It works on all time frames. It works on currency pairs and anything whatsoever. It works on it. Okay. It works very, very well, very well on it. And then we had to draw trend line, and then we went for that, and then we went for that. We got to, I gave you examples like this. I gave you this kind of example, a drawing trend line. I taught you that the third touch of the trend line is usually your AOI, your area of interest. That's where you'll be looking for whether the trend line will be respected, which will be bounce, or it will be broken. So you have the point one here, we have the point two here. At the third touch of the trend line, I discovered that the trend line was respected. And then we went to the chart. We saw several examples, and I told you to do assignment, which many of you did not do. No problem. The future will tell. No problem. Some of you, what I'm teaching you now, that looks like just because the class is free, me, I'm catching phone. The class is free. You didn't pay attention. No problem. You come and ask again. But the next time you be asking, you must have paid dearly for it. So we saw the trend line. We saw the beauty of trend line. We saw when trend line is respected, it works like a magic. It gives you entry at the beginning of an impulsive movement. I love it that way. Give you early entries at the beginning of an impulsive movement, and then it's able to catch the impulsive movement from the beginning, and so that can have a lot and a lot of pips in your favor. Okay, it's beautiful. It's beautiful. But see, we want to take a little step further. Okay, you want to go to. I want to talk about. I want to talk about. I want to talk about. When we talk about EMA, ADX, trendline trading strategy, then we'll talk about trendline breakout. Trendline breakout. Trendline breakout strategy. My goodness, when you see the power of this trendline breakout strategy, especially the combination of the two of them, my goodness, you always be cashing out from the market. By the way, there are two trades we took today, gold and GBP USD. GBP USD gave us 114 pips, gold gave us about 124 pips, and they were all, with support and resistance combined. And I tell you, it worked like magic. Even though the GBP USD trade has been, we'll be on it since last Friday, and then we entered profit today, which is Tuesday. Imagine you enter the trade. That trade was entered at the after the news that happened last Friday, and after the news, we make profit in the news, and then after the news again, we saw a very nice pattern, enter the trade, and then he didn't enter profit on the Tuesday. And that's remarkable. Sometimes like that, sometimes like that. It's not like I can be on a trade over the night and 2 days, 3 days, and like that. And then they didn't enter profit today, and it was massive. My goodness, it was massive. So we're able to catch, I think 114 pips on GBP USD, and I think 124 pips on gold. Okay. All right. So we want to talk about trendline breakout strategy, which is the main subject of this night. My goodness. Is anyone in class? All right. Beautiful. So that we're going to talk about tonight, and I love it. And see, trendline breakout strategy, please don't play with it. Don't joke with it. It works like magic. It works like trendline trading itself. See, trendline trading strategy is when the price bounce at the touch of trendline. The trendline breakout strategy is when the price break the trend line that you've already drawn. Okay, when the trend line when the price break already drawn trend line, you're expecting price to obey it, but this time around, price didn't obey it, then price breaks it. Then you enter trade based on this trend line breakout strategy, and you will love it. I'm telling you, you will love it. Imagine the combination of trend line trading strategy and trend line breakout strategy. Imagine the combination. Imagine the combination. The combination is remarkable. The combination is remarkable. The combination is amazing. Trendline breakout. Why trendline breakout? Okay. Why trendline breakout? Okay. It is a potential signal for trend reversal. Usually, when trendline breaks, sometimes it signals to us that the trend, okay, the present trend is about to reverse. The present trend is about to reverse. And don't forget that trend is your friend. See, the philosophy of a retail trader is trend is your friend. Trend is your friend of the market. You will always be in profit. You always be in profit. So it's the potential signal for trend reversal. When the price is about to change trend, usually trend line breaks. Okay. Number two, it signals the start of a new massive price movement. It signals the start of a new price massive movement, especially when I see a very steep trend line that's been obeyed at least once. I know that when that trend line breaks, price moves massively. Price moves massively when that trend line breaks. When trend line breaks, price move away from that trend line massively. Why? Because price really sustain a steep trend line. A steep trend line. Usually price move make an impulsive movement and then it pulls back, an impulsive movement and pulls back. But when the trend line is so steep, that the angle is so small, it's so steep, usually price does not maintain it. And I draw my trend line when it breaks. I just follow trend line breakout strategy and I make my money. So trend line breakouts usually signals the start of a new massive price movement. Okay? Right, let's continue. Now, trend line strategy, TLS, and trend line Both. Okay, I'm expecting my slide to change. Okay, trend line strategy, TLS, then trend line breakout strategy, TLBS. Both have tendency of giving you early entries and plenty pips in your favor, even up to 1,000 pips and much more. When you combine trend line strategy and trend line breakout strategy together, they will work like magic. They are complementary to each other. Next point. Trend line strategy is a trading system based on the obedience of trend line, while the opposite is the trend line breakout when the price breaks through the trend line drawn. Are we together now? Can I read that to your hearing again? Trend line strategy, TLS, and trend line breakout strategy both have tendency of giving you early entries and plenty pips in your favor, even up to 1,000 pips and much more. When you combine trend line strategy and trend line breakout strategy together, they will work like magic. They are complementary to each other. The trend line is a trading system based on the obedience of trend line. So when trend line obey when price obey trend lines, it is called when price obey trend line drawn, it is called trend line trading strategies, trend line strategy. And then why the opposite is the trend line breakout. When price break out the trend line, the price break through the trend line. Okay, it is called trendline breakout strategy, and you will love it. I'm telling you. I'm telling you. There are four setups we usually look for when it comes to trendline breakout strategy. There are four setups. There are four setups we look for when we are talking about trendline breakout strategy. Now, look at them here. They are all here. We have the immediate breakout setup. When you draw a trend line, in trend line, what's important to you is your point one, point A and point B. Point A, point B. That is the most important thing to you when you're drawing trend line. Point A and point B. And we said something. Number one, there must not be obstruction between two. Don't draw through the body of the candle and don't draw through the wick of the candle. Don't draw through the body of the candle. Don't draw through the wick of the candle. Let there be no barrier between point A and point B. Now, at the third touch, where you're expecting price to obey the trend line, price breakout. As soon as price breakout, you enter your sell straight. Your sell. This is the immediate breakout. Trend line breakout number one, sell setup. This is sell setup. So anytime you see something like this kind of pattern in the market, you are expected to take your entry, your sell immediately. Immediately. Now look at the second pattern. The second pattern is there. The second pattern is there. When you have already drawn your trend line, then the point A, the point B, and then price broke out to the point A or the point C. Price broke out the trend line at the third touch. The price is not obeying the trend line. It's breaking through. And when it breaks through and price moves a little bit down, and then immediately price comes back to retest. So we call it pullback and retracement. Pullback and retest. It comes back to the trend line, retest it, and then went back to sell again, and then the price just goes down. So this is second pattern that you should look for. Okay, so we call it trend line breakout and retest. Trend line breakout. This happens a lot of times in the market. All of this pattern you are seeing on the screen happen a lot of time in the market. So you have the third point. You have the third pattern when we have that is for a buy market. The point A and point B, and at the third touch, price breaks out, and then it just goes up and up and up like that. Then you have the fourth pattern here now. Price breaks out at the third touch, and then before moving far away, it comes back to retest the broken trend line, and then it goes up and up again. So these are the four patterns that we usually look for when we're talking about trend line breakouts. Are we together now? So if you are paying attention, if you draw trend line in your chart, you will discover that all this happens again and again and again and again. I'm telling you, again and again and again and again. So it's important that we understand that. It's important that we understand that perfectly well. Perfectly well. Okay, so look at this, for example. This is immediate. This is retest. This is example 4, breakout and retest. You discover that I draw my point A and then point B, At the third touch, you discover that price broke, came up like this, and came back to retest the trend line again before continuing in the upward direction. Did you see? This is remarkable. I draw my point A and point B, and I'm expecting price to respect the trend line at the third touch. I'm expecting price to respect the trend line at the third touch. So what happened there is that price broke through, went up a little, and then immediately after the three candles, after two completely closed candles, then price came back to the broken trend line and retouch it again. So breakout and retest, breakout and retest. The price broke it out, came back to retest it, and then price moves, aggressively to the upside. Very remarkable, very remarkable. Let me give you another example here. So you see, I draw my trend line, point A and point B. Okay, this one is which example is this one now? This is the first example, immediate breakouts, immediate breakout. So you see point A and point B, okay? Point A and point B, price is going up, price is going up, price is going up. And then at the third touch, expecting the price to obey my trend line. But now price has disobeyed it. Price has broken out. As it broke out, what do I do? Immediately that candle that broke the trend line closes, I enter my sell immediately. I enter my sell, bro. As in nothing stopped me. I enter my sell immediately, bro. As in, and then price moves in my favor, and it goes down and down and down like that. And that is so that these are examples of trend line breakout, and you must pay attention because it is a setup that I love so dearly. It's a setup that does not lie, that does not lag, that is based on price, that is based on price only. You don't need indicator, and then it works like magic. I'm telling you. Now you see this one too. This one is the example two, breakout and retest again. Okay, buy side, that is example four again, so you see I draw my trend line point A, then at the top of the trend line when I'm expecting price to go back to bounce, price breakout, and as soon as price breakout, it moves up a little bit and come back to retest the same trend line before continuing in the upward direction. And these are patterns that you should always look for in the market. I'm telling you, big time, bro. I'm telling you. Honestly speaking, you see, point A, point B, and then at the third touch, price breaks out, and then it come back to retest it, and then continue in the upward direction. Very remarkable, very, very remarkable. Please don't joke with trend line. I beg you, don't joke with trend line. Don't joke with trend line. Then you see it here again, my point A. You see it again, my point A, my point B. At the third touch of the trend line, price breaks out. As soon as price breaks out, and then price later, after just one or two candles closes below it, price came back to retest the trend line, and then it continues in the downward direction. It's an amazing strategy. It's a strategy that does not lie in any way at all. I'm telling you, you will love it. You will love it. I'm telling you. Start drawing trend line. Just draw it anyhow. See how price reacts to your trend line drawn. Okay? See how price reacts to your trend line drawn. Note, please pay attention. I like to give you some notes, some interesting things I should take note of. Okay? Please take note of this. Please take note of this. Okay? Take note of this. All right. Note. Pay attention to significant trend line because market moves far and fast when significant trend line is broken. You need to understand that professional traders use trend line all over. All professionals, or professional trader, they draw their trend line. So the more obvious, the more clear, the more glaring, the more conspicuous your trend line is, especially when you draw it from significant, when you draw it from, when you draw signal that attracts massive attention all over the world, it attracts many people trade based on the trend line, whether broken or bounce, and then it moves price in that direction. Don't forget that when the market, see, it has a way of attracting volume, and then people, and then price is is able to move in your direction. So pay attention to significant trend line because market move far and fast when significant trend line is broken. Okay, are we still together? The significant trend line are the ones drawn from significant peaks and troughs found on 1 hour time frame and upwards. Okay, significant peaks and troughs. The significant trend line are the ones drawn from significant peaks and troughs found on 1 hour time frame. So when you draw the trend line on 1 hour time frame, upwards, 1 hour, 4 hours, and then daily and the likes. Of course, I told you that you can draw trend line on any time frame, even 1 minute, 5 minutes, 15 minutes, 30 minutes, and upwards. But you see, when you draw them on 1 hour time frame, is that it attracts more attention and then price move quickly away when it breaks when trend line when 1 hour time when our trend line is broken, it attracts massive attention all over the world, so it pushes price in the direction of the breakout. So the more a trend line is obeyed, the stronger it is. Now listen to this: the more a trend line is obeyed, the stronger it is, and the market move fast from it when broken. I love this. I like this so much. I have to pay attention to it. So when I have a trend line that I draw a trend line at point one, point two, point three, it bounce, point four, it bounce, point five, it bounce. If that trend line breaks, that same trend line that price has been respecting 3 times, 4 times, 2 times, 3 times, 4 times. My goodness, if it breaks, oh boy, oh boy, if it breaks, parent like this, price moves fast from it. So deadline breakout in such scenario will generate you a lot of profit. So pay attention to trend line breakout, especially when price has obeyed it couple of times. Okay, so the more times the trend line is obeyed, the stronger it is, and the market move fast from it when broken. Okay, so gentle trend lines are more reliable than steeper ones. When it comes to obeying breaking, trend line obedience, price obeying trend line. Usually, when trend lines are more gentle, gentle trend lines are more reliable. They are more reliable. Price obeys them more than the steeper one. I think I've said that before. It may be because price may not be able to sustain the steepness. So I like it when it's broken out. When a steep trend line breaks, I like to enter breakouts with breakout trading strategy. With trend line breakout trading strategy, I like it. I like it so much because price move quickly away from a steep trend line that has just been broken. Okay, so points. Wait for the candlestick to close at the touch of the trend line on your chosen time frame. Wait for the candlestick to close. So when you draw a trend line, when the market is still you know when the candlestick has not closed below or above the trend line to take your trend line breakout strategies, don't take the trade yet. Allow the candlestick to break to close. Wait for the candlestick to close at the top of the trend line on your chosen time frame. Note there is something called false breakout. Sometimes you have false breakout. False breakout is only the problem you can have when it comes to trend line breakout strategy. And there are ways to know, to clarify if there's a false breakout or not. So a false breakout always look real, but after forming a few candlestick reversal, but after forming a few candlesticks, other forming a few candlestick reverses and get you stopped out with a loss or break even and continue to follow the direction of the previous trend. Okay, sometimes it happens just a first breakout. You think price has broken, remember to close inside the trend line, and then price continue in the direction of previous trend. Okay, so it happens, and that's the only problem you can have with trend line breakout strategy. Okay, that's the only problem you can have. So let's go to the next slide. How to enter trade with trend line breakout. So enter trade at so when a candle breaks now, the candlestick that break the trend line. So you enter trade a few pips on top or below the trend line breakout candlesticks with sell stop or buy stop. So when the trend line is broken, you will not just enter trade. Sometimes it has a wick. Allow price to touch that wick again. So what do? You enter a sell stop or a buy stop below or at the top of the candlestick that break the trend line. Okay, so it's very important. I'll show you all of that, maybe in the next class. Or so wait for currency to close at your trend line on your chosen time frame. Place S. Take note of the trend. Okay, okay. Take note of the reversal candlestick pattern. We shall we shall consider later on. Okay, we shall consider later on. So then set or trade your stop loss. Note that significant and obvious trend line draws global attention, meaning majority of millions of traders all over the world, I've said that before, are watching for the price reaction to the trend line. So you should expect explosive movements. Okay, expect explosive movement, and that is all I want to discuss with us for tonight. That is what I want to discuss with us for tonight. So I'd like you to go to your chart now. Give me one example each of all of the four patterns of trendline breakout that I've shown you. You have the sell, two examples for the buy, two examples for the sell, immediate breakout, and then breakout and retracement, both for buy and both for sell. So make sure you do